Morning, everyone. Jason, we'll just give a few minutes for the rest will come in, and I'm hitting record as of now, so that way you can start maybe, or we're giving a few minutes. But I know for sure that we'll have like a few more, or a good number will come in, slowly come in. I'll let them in, while you're talking. So yeah, you can start
Okay,
whenever.
perfect. Well, first of all, thank you, Jeremy and Kathy, for inviting me to this presentation. Uh, I am myself, my name is Jason. I'm President and CEO of Executive Mortgage Brokers here in the Twin Cities. Uh, I first of all want to wish everyone a happy new year. I do think we are going to see rates drop. There's a lot of pressure for rates to be dropping right now, and I do think as long as something majorly doesn't happen, we'll see rates drop here. Hopefully, we see them in the fours, which would be really nice. And we're already sitting in a situation where there aren't a lot of sellers. And I think we might be seeing multiple offer situations going on again for like the fifth year in a row or however many years in a row here coming up. Here in the next 6 months, which is good news for us, right? Ish. Yeah, I mean, I guess it would be nice to be balanced, but it's good to have buyers, right? Good to have people that are interested in purchasing their first homes. So, any rate, as I mentioned before, my name is Jason. I'm President and CEO of Executive Mortgage Brokers. We have about 32 loan officers right now. Uh, we are one of the largest, we are the largest in the state of Minnesota company that has a combination of duly licensed loan officers and real estate agents in the state of Minnesota. Uh, quickly about myself, and then I'm going to go into what's called a magic trick, and I'll show you that in a second. So it's going to be pretty exciting. This is a very, very going to be exciting sales huddle. Number one,
Number one.
whoop. Hi, Dennis. Number one, I started off in 2009 and started back in the day. I've been Eat Sleeping Mortgages since 2009. 2010, I became fully licensed. And I was back in the day of River City Mortgage. I don't know if a lot of you probably know way back then the jingle on the radio, rivercitymortgage.com. So I was at, that's when I started. And I basically have been eat, breathing, sleeping mortgages since then. And literally eat, breathing, sleeping mortgages pretty much every day since then. So I'm on year 16 right now. Um, uh, Randy, are you in there? Oh, that's somebody else's, Randy. Okay. So, at any rate, I started as a retail loan officer that's doing retail, and then I got into wholesale in 2017. I'll get into that in just a minute. But what we're going to do now, since we've got not enough people here, I think we've got some people joining here.
Yeah,
13.
everybody's
Right?
going to start getting on, buddy. And one of the reasons that I want to make sure that we had you on here was, to show everybody how they can make extra income with the real estate stuff. So I
Yep.
got back from my snowmobile trip. I was up in Canada, and then I saw Rob and Brandon wasn't home up in Duluth, but I'll be back home last night. So,
Good. Was it
um,
fun?
that's how. Uh, so, straight on your call.
Oh, yeah. That was a little glitchy. I didn't hear everything you said there, Randy.
Okay, I'll have to make sure. I don't know if I have the best internet here, but just want to make sure I'm on your call. And we're going to show everybody the opportunity to make some cash with the real estate license. I mean, with the mortgage license if they want to, but we know that you have great programs also. But I think I can't wait. So I just wanted to help interject here. Everybody's getting on the call. They usually get on the call a little late, and a lot of people don't pay too much attention. But hopefully, we get some interaction.
All right, that's good. Well, thank you, Randy. I appreciate it. Yeah, uh, I appreciate it. So I got into the wholesale mortgage industry in 2017. So that's kind of sort of how I started, and I've been doing mortgages, eat, breathing, sleeping mortgages since. So I don't know. I'd like to get as many people as I can on this trick. Jeremy, is there? I think I'm gonna do the magic trick now, just to kind of get just to kill some a little bit of time and blow 13, 14 people's minds away. So before I started mortgages, I actually was a magician and I did magic tricks back in the day, believe it or not. And then the mortgage crisis happened and everybody got out, and I decided to get in. And it's been uh, uh, quite the experience since. But at any rate, I'll show a magic trick. Jeremy, I don't know if we should use Jeremy. Jeremy, I guess you can. Can you unmute yourself? Okay, so we're going to use Jeremy for this, and I promise you guys, we did not talk about this beforehand, and this is going to be purely. I think Jeremy's going to be more blown his mind than anybody else, because Jeremy's going to be the one choosing the number. So, Jeremy, what I'd like you to do is I'd like you to go ahead and I want you to, there's 52 cards in a deck. Jeremy, can you hear me, right?
Yeah.
Okay, perfect. There's 52 cards in a deck. Now, Jeremy, what I want you to do, now we have not talked about this beforehand, correct?
Yeah.
And you don't know that I do magic tricks beforehand, correct?
Yeah.
That's correct. Okay. So what we're going to do is I'm going to do a quick magic trick. This will blow Jeremy's mind, especially because he is for sure not, has no idea about this. But Jeremy, there's 52 cards in the deck. I want you to pick a card, pick a number. I'm going to have you pick a number between 1 and 52. And then I'm going to show you a list of cards on my cell phone. Let's make sure you can see that. Yeah, it's a little bit good. Okay, good. All right, I'm gonna choose. I'm gonna show you a list of cards on our list of cards on my cell phone. Okay, so and then you're gonna look at the card that's next to that number. Okay, all right. So what I want you to do right now is I want you to pick a number between 1 and 52. And again, I'm going to then show you some cards. I'm going to show you a list of 52 cards, and you're going to want to look at the card next to that one. Okay. And then remember that card, but don't say it out loud. And I want everybody else to remember this. And I promise you, Jeremy and I have not talked about this beforehand. And this is going to be a number Jeremy is going to be coming up with randomly, completely random. Jeremy, 1 through 52, give me a number. Give me a number between 1 and 52
Okay.
right now. Go ahead, out loud.
Oh, I yell it? Okay, 26.
Randy, why are you unmuted, Randy? Do you want to do this now? What's going on? Okay, Randy's unmuted again. Okay, Jeremy, go ahead. Number between 1 and 52. What's your number?
26.
26. Now watch this here. Okay, look. Oh, darn it. I'm trying to get the phone in here as well. I'm going to go to 26 here. Watch this. I'm going to pull up the cards. Here's the list of cards right here. There's commonly selected cards, as you can see. I'll put this up to the camera a little bit. I don't know if you can see this. I'm going to click on it. I'm going to go down. I'm going to not look around. Can you see these cards by chance or no?
Yep.
Okay. I want you to look at the card. I'm looking off to the side. I want you to look at the, oops. I want you to look at the card that is 26. Do you see the 26 card, Jeremy? Yes or no?
Too small, I can't. But
Okay, it's not looking through the Maya. Oh my goodness. Okay, let's try to get this here. I'll do the background here. Oh boy, it's too
Pull
small.
back a little bit.
There we go. Is this too small still?
yeah.
It's too small. Oh, it's not going to work. All right, here, let me see if I do this. All right, there we go. Can you see that now? I'm just going to remove my green screen here. Okay, see all these cards?
Yeah. Okay, much
They're
better.
backwards a little bit. Look at number 26. Are they backwards or are they forwards?
Good, good. I can see it. Yep.
You got your card?
Yep.
Notice there's not a card there that's the same, correct?
Yep.
Okay, you picked any card you wanted to. You picked any card you wanted to. And I'll show you now how I knew you were going to pick number 26. Was this your card, Jeremy?
I'm gonna drop this call right about now. Ask me.
Yes.
This is crazy as hell.
It's so much better in person and not on Zoom and when I got this flashing thing going on, but it looks pretty good. It works every time. So next time, if I see you out in the public and you just say, show me that trick with the 1 through 52, and I'll show it to you. It works every time. So I kind of wanted to show everybody. And Randy used to be a magician too. I don't know if you all know that or not. Randy, didn't you used to be a magician? Yeah.
I got a couple up my sleeve.
Yeah. And a skydiver, yeah, very much so. So, okay, cool. Well, all right, we'll move on. I just wanted to show that and get that show everybody that trick there. So what we're going to do is I'm going to keep this presentation simple, and I'm not going to make it too complicated. I'm going to share my screen now. So I'm going to come back at the end and answer questions, because this is a lot of information, and this is a lot of people get confused and are concerned about compliance and stuff like that with what I'm about to share. So let me go ahead and share my screen. There we go. I do believe it's full. Jeremy, is that working now?
Yes, sir. I can see it.
Okay. Whoops. La, 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 la. That's not what I wanted. Okay. Um, there we go. Okay. All right. Okay. All right. So we're going to just kind of keep this simple and short. There's only 10 slides, and I'm leaving this open to a lot of questions because there's going to be a lot of questions on this information, because this is pretty big information, and this is huge, especially when you see the numbers here that are involved, and how this is going to help your business grow. And I'm going to try to keep this as informative as possible. Basically, right now, the presentation is why some realtors hold their mortgage license, and what's the reasoning behind that. Okay, so let's go ahead. I kept these slides as simple as possible. The big idea right now, one of the four main reasons why real estate agents like myself, I'm a real estate agent with National Realty Guild, as well as a loan officer. And I think out of the 32, I think 4 or 5 of us are with National Realty Guild as well, and duly licensed as a real estate agent and a loan officer. Number one, this helps in regards to a one client relationship. So you can answer questions as a duly licensed loan officer and real estate agent. You can be more informed and answer questions to your clients as they're looking through the house, or as you're listing their house, whichever it may be. So it's a one client relationship, and that's what I mean. There's more control over the transaction, so you have more control versus calling the loan officer saying, hey, where are we at with this file? And they say, oh, we got another week. Well, you are going to be, as a duly licensed loan officer and real estate agent, you'll actually be involved in the process. So you'll know exactly where we're at in the file, what is needed from the underwriter, what the turn times are, and you're going to have a lot more transparency in the file itself. So that's the second thing. And as Randy mentioned, the third thing is 2 income streams, and that's huge. And we'll touch on that a little bit more on like how much that is here in a minute. But there are 2 income streams you have. You obviously have your real estate transaction as a real estate agent, plus you also have the loan side of things. And number 4, there's just cleaner communication all around, because there's less people involved in the transaction. So it helps with client experience. So we're going to move on to the next slide here. So who fits this? Agents who want more income per relationship, agents who want to keep clients long-term, because they're not asking or having multiple. You refer your client to a lender, they're going to continue, marketing to them, and may or may not send them back to you. This way you can kind of keep your clients long-term. Agents are also who want tighter control of their closings, and agents who are curious about the facts of the loan, agents that want the facts of what's going on in the loan process. So those are the people that are going to fit this. And I'll show you some more stuff here in a second. Okay, before I do that real quick, there is 2 parts to this video. One is how to make more money as a real estate agent, and also why people in 2026 are becoming duly licensed here in Minnesota. By the way, this is pretty popular already on the East Coast and West Coast. It's just slowly starting to gain traction here in the Midwest, just like any other fashion thing. It all happens on the East Coast and West Coast, and then comes in to the Midwest. And we're one of the last, people to actually, grasp this idea. But before I continue with that, I'm going to touch real quickly on what the difference is between wholesale and retail, because this is a very confusing and very important in today's world as a real estate agent on what the difference is between a wholesale mortgage person or a lender and a retail mortgage person or lender. What is the difference? Okay. Some of you may already know. Some of you may have already been out to what's called UWM, which you see the logo in the bottom left or the bottom center part. Some people have already been out to UWM and have been to the campus and know what wholesale's like. Not totally understand. It just knows that it's insanely huge. It's about the size of 10 Amazon warehouses. I call it the heartbeat of America, and it's the number one lender right now in the country. And there's a reason for that, and I'll get into that in a second too as well. But I quickly touch on this again. It's just only going to take about 2 minutes here about wholesale versus retail. So brokers act as a wholesale. We act as an intermediary between the borrower and the lender. So we have many options. We're accessible to multiple lenders. We currently have 75 investors that we can work with, and it's growing all the time. And what's great about this is, for example, and I'll be the first to tell you if you're listening, so UWM is good at certain things. They're not good at everything. They're only good at certain things. Like if you have a DSCR loan or a bank statement loan or an investment, multiple investment properties or a second mortgage, they're not generally the best option for that. That's why we have 75 of them. UWM is just one option. And then we have multiple options that I take my loans. I take my loans to UWM about 60 to 70% of the time. I don't take all my loans to UWM. It's just 60 to 70% of the time because other investors do better at DSCR or reverse mortgages. Like UWM doesn't even do reverse mortgages. So it depends on the mortgage and also Mahafa. UWM doesn't do Mahafa loans. So we have a different investor, Windsor, that does our Mahafa loans. So it does depend on the program and what to do. But the UWM is not the win-all. But if it's an inside the box Fannie Mae, Freddie Mac loan, UWM is usually the best option for quick speed and lower rates generally. Okay, as of today here in 2026, typically rates are lower with a wholesale mortgage. With wholesale mortgage loan officers or wholesale lenders. There's more loan options and flexibility, as I was just mentioning. You can go down to 580 credit scores. You don't have those overlays that retail banks or credit unions will have. Basically, if you have an approval with AUS, I'm not going to get into complicated mortgage talk, but basically, if there's an investor, if it works within the guidelines, then there's an investor that will take it. The broker earns commission at closing. This is huge. I'm the first company in the state of Minnesota that actually offered 1099 to the loan officers back in 2017. Now it's becoming more mainstream, but back then, and still today, I would say 80 to 90% of loan officers are W-2'd, but you can certainly be 1099, and I certainly 1099 have been 1099ing my loan officers for since 2017 for 9 years now. So there's nothing wrong with that. You can choose those options though. Some loan officers are like, I don't save enough money till the end of the year and I have a big tax bill, so I would rather just be W-2'd. So we just W-2 them. Now, granted, there's only a couple loan officers that do that, but the rest of them are 1099 because now you can manage your own expenses and work with your own accountant as well. So that's why we do 1099. It's better for borrowers seeking options and competitive rates. That's what wholesale lending does. Retail, on the retail side on the right here, it's a one lender, one box, one underwriter, one set of guidelines. What's cool about us is that if appraisal comes in low, and I'm sorry if I talk too fast, but there's a lot of information, but if an appraisal comes in too low, we just take it to another one of our investors and get it reappraised. Or if an underwriter doesn't agree with one of our guidelines, we just take it to another investor and wait for an underwriter to actually understand what we're trying to say and do and understand that it does fit within the guidelines. So, but when I was in retail, you just got one underwriter, one lender, basically one box, and that was it. If it doesn't work, I mean, there were options to broker loans out, but 99% of all our loans kept inside the bank, the retail, inside retail, the credit union, it kept the guidelines had to be inside there. For example, like let's just say 610 credit score for an FHA borrower. The retail requires 620 or higher. Now they'll broker it out, but they want you to improve your credit score. So most likely they'll tell the borrower, like I was trained in retail, to increase the borrower's credit score versus taking it through the broker channel outside of our of retail. So, but now 610 credit score can be done on the broker side any day of the week. It closes a lot faster. So there's less flexibility. There's limited to the lenders loan programs that they have. That's it. Potentially higher rates. Legally, I have to say that, but 99% of the time they are. That's why UWM is one of the largest right now because their rates are so good, plus their customer service, plus all other wholesale lenders. So that's what's cool about that. There's 75 people competing for these people's loans. So they have to keep their rates down. And that's why their rates are down and they're so low is because they know that I can just take my loan to Penny Mac or Freedom. I can take my loan anywhere, I want. So the UWM and Penny Mac and Freedom are all competing against themselves to keep the rates low, which helps me as a wholesale mortgage broker. So, but with retail, you just have one, you have one, branch manager and president and vice president and all them that you stick with those rates. That's all you get. They control the rates. The upper level management does. Retail lenders work for the lender, not your client. That's very, very, very important. So when you work in retail, you're actually working for that bank or the credit union or for that mortgage company. There are some retail mortgage companies here in the Twin Cities. You might have heard of them: Bell Mortgage, Mortgage Unlimited, Loan Depot. Those are all Rocket Mortgage. They're retail as well. So those are all retail lenders that they work for that bank or that company or that mortgage company. They don't work for your client. Type thing. So there's less transparency to the borrowers because there's less transparency to loan officers, and it makes the whole client process go a lot smoother. So that is wholesale and retail. That could be a whole nother sales huddle, but I'm not going to go deep into that because we're going to continue talking about the real estate agents and how they how you become duly licensed. There are 3 levels of involvement. When a loan officer or a real estate agent becomes a loan officer, they have 3 different levels, and each real estate agent chooses their own level in regards to how far or how deep they want to get into the loan process. For example, level 1 is just a referral style involvement, with your basically, we do all the heavy lifting. We do all the pre-approvals. We'll take on the client, and then you just get paid a commission of the percentage that is being made on the loan. And what's great about this is wholesale is also very transparent in regards to the lending side of things. If you look at a closing disclosure, you will always see exactly down to the penny how much executive mortgage brokers got paid. When retail, you don't know because they sell the loan 30 days later, make some more money. There's money going on in the secondary market that they're selling with. And there's a whole bunch of stuff that's not disclosed on the closing disclosure. As a wholesale broker, you see exactly how much down to the penny that executive mortgage brokers made on that loan. And there's no additional monies that are being made. So level 1 means, hey, Jason, I got my mortgage loan origination license. And I would like to do level 1, just give you the name and number and have you close it. And that can be done. And that's one option as a loan officer, a duly licensed loan officer and real estate agent. Another one is level 2. You can help more directly in the process. And you can still focus on real estate. You can still focus on real estate on all 3 levels. That's what I do. But the other one is you get a little bit more involved, like pulling credit, running AUS. I'll talk a little technical here. Running AUS, checking guidelines, doing maybe a TBD underwrite. You're doing a little bit more process. But some real estate agents that are with my company, there's like, I don't want to do all that. I just would like to make some more money on my loans. I want to make some money on the loans, period. And so they'll do level 1. Level 2, you get more involved, which we do have help and training for that. We have 2 full-time people also that will help you grow and learn more about the lending process and what's involved. Ideally, what's best is just, as you know, as real estate agents, is to just do the mortgages, and then we show you what we're doing, and then you just will eventually start catching on. That's kind of the idea there with level two. Then level three is fully licensed, originating your loans for your clients, and that's 100% commission, and I'll explain that in a second. So you do get up to 100% commission, and I just wanted to show those tiers or those three levels before I move on to the next one. So what does the licensing process actually involve? Basically, you sign up for the NMLS, and we're here to help you with this. It's not that hard. And also, education requirement, you're already halfway there. It's only 20 hours. That's it. So we're talking 20 hours. There's 40 hours in a work week. To be a full-time professional in this industry, I think at 20 hours of education is very, very minimal. This is a very small commitment to be making a lot more money with little risk. So you're already halfway there as real estate agents. Most of you know what I was talking about just now when I said closing disclosure, AUS, or Fannie Mae, Freddie Mac. Those are all things that you probably already aware of, and so you're already halfway there. And you can easily do these 20 hours online, and there's a ton of places you can do that with. I'll show you that in a second. Then what you do is you take your national test, which is done through Pearson VUE, just like your real estate exam was done. And then once when you're done with that, you're licensed and you start originating. It's not complicated at all. Moving on. Timeline. So this is how long it takes. Right now is actually a good time to start, because you remember this too, that not only are you going to be getting these purchases, but now you can do refinances. Like I said at the beginning of this video, I do believe rates might get into the fours here in about 6 months to a year or less, because we have a lot of pressure to bring rates down right now. And if rates get into the fours, not only are you can go back to your previous clients knowing what their rates were at and refinancing them as well and making money that way. Either with level one, two, or three. Either way, you say name a number, hey, Jason, these people are at a 7% interest rate. Let's refinance them. And then you get paid within that level. And I'll tell you those breakdowns here in a second. The timeline example. So what happens is on week one or week two, like in the next week, you can sign up at the knowledgecoop.com. I encourage you to take a picture of the screenshot right now of the video here. Knowledgecoop.com is one of the places you can get your 20 hours, your SAFE, it's called SAFE, 20 hours loan origination course. And basically you just sign up there. It's, I believe, it's going to be $300 to $400. But I have something I want to mention about that at the end. Mortgageeducators.com is another option. And then there's also oncourse.learning.com. Those are just three of the options. There's many others to be included as well. After that takes about a week or two. Generally a week is all it is. It's 20 hours, so it should go pretty quick. Then you do that at your own time, at your own pace. Because you're real estate agents, I would recommend doing the independent version. I don't think you need to do the online or live online version, because you already know 50% of what's needed to do with our industry and with the mortgage industry. So you can just kind of sort of have it playing in the background and doing the 20 hours there. Then you do 3 weeks of test prep. I'm just kind of guesstimating. CompuCram.com is a good place to do that. And then that takes 2-3 weeks. And then after 3 to 5 weeks, you'll do your test, and licensing. You'll be licensed at that point, and onboarding is what would be next, which is very simple to do here at EMB. Moving on, what support looks like. We have templates, we have checklists, we have scenario helps, we have videos, there's step-by-step guidance. We're here to answer your questions. As I mentioned at the beginning, I eat, breathe, sleep mortgages. So I'm here to answer any questions and help you through the entire process. And we're here to handle scalability. We can handle the scalability. For the people that have been to the UWM, you know that they can scale. And they are backing me up. They know exactly that this video is going on. They know exactly that we're doing this. They're there to help. They're ready to help me as well. So, so we're here for any scenario help or scenarios that you might have. I also encourage you to use ChatGPT. That's a huge, huge thing for me. I'm a very big advocate for ChatGPT. This whole presentation was pretty much done via ChatGPT. And I would recommend you do that as well, which I think is another whole sales huddle in itself. But we're not going to we're going to continue talking about this other stuff here. This is a clear lane. We create a clear lane for beginners so nobody feels overwhelmed the entire process. Okay. Moving on now, we're going to do da da da. Okay, so next up, if you're curious, use a QR code. You can scan this and you can text me or email me. That actually gives me your name and phone number, your name and your email. If you scan that QR code, and I can send you over some more information and packets on how that works. I am going to go ahead real quick because I think one of the questions is going to be how does the cost break down? How does the compensation break down? I'm going to show you that real quick and how that would. I'm going to go into the levels here. It's real simple. It's not complicated. And this is where you're going to want to put your seatbelt on to see how much more money you'll be making as a duly licensed loan officer, and why most of us are duly licensed loan officers, and why I think probably in 3 to 5 years from now, I would say 30 to 40% of all real estate agents are going to be duly licensed. I mean, this is the beginning stages. I do think that it's going to be growing as time goes on. Level one, which is just basically you refer. Well, I'm going to give you an example here. So let's say you do the average loan amount in Minnesota is $400,000, or that's the average purchase price, but we're going to use that as a loan amount. So what we do is we get paid 2.75% on every loan. I'll repeat that, 2.75% on every loan. So if we take our calculators out and we take a $400,000 loan, let's just say they do 3% down or 5% down. We're not going to go there. We're just going to use our $400,000 example. Let's just say there's a $400,000 loan amount because this makes a lot more sense. And I like to be transparent and honest because I've noticed that people in this industry are not transparent and honest. And I think the more we become transparent and honest, the more successful our industry will be, and less people, the clients will be less hesitant to be working with real estate agents and loan officers. So on a $400,000 loan, 2.75% of a $400,000 loan is $11,000 on that one loan. The average loan amount, again, in the Twin Cities is $400,000. Okay, so 11 grand is what the loan officer would make on that file. Executive mortgage brokers would make. We do not charge basis points. I feel basis points is not the way to be charging people. We charge a one-time fee of $9.95. So executive mortgage brokers, to make sure you're staying compliant, to make sure the Department of Commerce stays off your back, and the state of Wisconsin and all the other states that we're in about 14 other states. It's $995. So you have $11,000 commission you'd make on that loan. You'd subtract $995. So let's do that now. And that equals about $10,000. Okay. So we're just going to say $10,000 even. Of this $10,000, level one, you get 25%. That is $2,500. You would get $2,500 as a 1099 person at the end of the year for that one transaction. That's level one. Level two, if you did more work in the file, you gathered documents, you ran the credit report, all that, then you get 50%. That is $5,000. Level three, if you go ahead and do everything from beginning to end and follow it, you will get $10,000 for that one transaction, including your real estate transaction as well. And that right there, folks, is why there are so many real estate agents and loan officers becoming duly licensed, because it just makes more sense for the borrower. It makes more sense for the client. It makes more sense for the transaction, and it makes more sense for the loan officer as well, and the real estate agent. And that is why we're doing this. And I don't know how long did I do this? Did I do this in a half hour? Hopefully I'm done here, but I'm going to go ahead. Hopefully I did everything here within a
Yeah, it's
half
about
hour.
a half hour. I'll
A
tell
half
you,
hour.
when I
Okay. All right.
started
So
National Realty Guild or just Realty Guild, we had a national loan brokerage for about 6 years, and it's what got us off the ground because we're making double the income. When the FHA, all the mortgage crisis came down, we shut down the loan brokerage. But it's kind of a no brainer, especially people want more of the money, but the level one is so easy. If you could set up the website for them to have their client apply through, I mean, it's easy to have some extra income and not have to worry about learning the whole process.
Correct. Yep, that's very, very correct. Yeah, and you don't have to learn the whole, and a lot of real estate agents do, but some of them do want to learn more as well, which we have offered that opportunity to do that as well. So I think Jeremy, we can open it up to questions because I think maybe I don't know if people have been chatting. Are there on there as well?
Yeah, there's one from Brenda. What is the average compensation you charge the borrower?
The average compensation is not too well, it depends on the borrower, but most of the time it's 2.75.
It's not really
It's
an average compensation. It's the
oh
industry standard of what a wholesale broker gets paid.
yeah. Did I answer? Did she say the average compensation to the loan officer or to the
I guess
client?
to the client thinking that you might be charging a certain fee, but it's kind of the standard comes from the wholesale lender to the
Right.
broker.
Yeah, so there are no lender fees. That's the other thing as a wholesale broker, which is great. So as retail, you have lender fees. You have like all these lender fee, application fees, all that. We actually cannot charge an application fee up front. Those are actually, we get paid from the investor. So there's two ways as a mortgage loan officer you get paid. You can either get paid from the borrower up front, in lender fees, or you can get paid on the back end from the investor. And so we get paid from the investor on the back end, and that's 2.75, 2.75%. Is there any other questions, Jeremy?
Anyone who has any questions, you can feel free to open it up here, or of course your questions directly to Jason, or you can put in the chat box. Anyone?
And I think I don't know if we want to open up and unmute everybody or not, but uh, so they can just ask questions and we have an ongoing conversation about it. But
Brenda
I'm
Do
open
you
asks,
to all.
sorry, Dennis, go ahead.
so if you get to the level you're at, if for instance I sign up and stuff, you would have to get some type of commission off of me generating type thing? Is that part of the system or
Yeah, $995.
okay, so every sale that I make, you'd get 995.
Correct. Just
So
like
and
six
then
nine.
do you have to reach a certain rank? Do you have to be a broker or something like that to be able to be where you're at, or how does that work?
Yeah.
To be able
So
to do the same
yes.
thing with other people?
Yeah, so all my loan officers charge I charge them 995. So with me, I don't my own loans, I don't charge myself 995. I do the loans for free, but that's because I went to the Department of Commerce and I started the company up. You see, so I don't know if that answered your question, but
Yeah, so you're the broker in this
owner.
instance for me as a loan officer. That's what you're saying.
Correct. I'm known as a broker owner, is what they call it. So I'm 100% owner. There's no angel investors. I'm 100%. There's no other co-borrower, no other. It's just me, myself, and I. That's it. And
Dennis, I used to have a company just like this, and we just decided to focus on the real estate side and partner up with people instead of have to learn everything and run everything. And, you know, so it's very similar. So the one thing when I got started doing mortgages is a guy with a similar plan came over and he said, you got to comply with the RESPA. And so as long as like, I think Jason, there might be more to it, but basically, if you have a website set up at Executive Mortgage Brokers and there's a URL that's like a sub URL that said something like /Randy or Dennis, if you had your client just go there and apply, doesn't that meet all the requirements to get a referral fee? Because
so
you brought them in through your loan application, and then the loan application comes into the company, and you or your processors handle it, right?
uh, so can you sum up that question again? I was trying to get my pretty face on the video so people can see what I was talking about. Can you sum up that question one more time, Randy? I'm sorry.
Yeah. So the minimum somebody needs to be, so obviously this is a way for a mortgage brokerage to act similar to like the real estate brokerage commission wise. And somebody can be a full-time loan officer or an agent can just try to refer business in. But the agent has to comply with RESPA in order to get a check for the loan. And so I think the minimum requirements that we can do is, if you set up like executivemortgagebrokers.com/Jason Verster, right? That's your loan page for people to apply for a website. So then if there's another URL that's /Dennis Berger or /Randy Berg, we have our own private page. So really, if we have our clients go there and they just enter in their data to fill out the mortgage application, isn't that enough for us to legally get paid? The
If
referral
you're
fee?
if you're a licensed loan officer,
Yeah,
yes.
if you're a licensed loan officer, but then you still
Yes.
have to do A, B, and C.
Yeah, you still have to you have to do the 20 hours. Yeah, you still have to become a duly licensed loan officer. Yeah, there is no, even with FHA loans now, they're allowing FHA, the real buying agent, and the buying agent to be a loan officer as well. They allowed that, I think, 3 years ago. They released that. Before they were like you could not be an FHA loan officer and a real estate agent at the same time, but they let that go. And I've been reviewed and audited by the state of Minnesota four times now, and they know what we're doing and that's duly licensed. So and they know what's happening. So there's nothing illegal about this there's nothing anti-RESPA about it. The only issue would be is if they filled out the form and they weren't licensed, then they're not going to get the 25, 50% or 100% commission in those levels.
Right. So I guess my point here too is this isn't new.
No.
I had the same company back in 2003, 4, 5, 6, and 7, and 8. That's why it helped us get off the ground financially because we had dual income. And we've had what? I think it's been since 2013, 14, or 15. We used to have classes for you. We were training realtors about 10 years ago and having them get their license and go into your brokerage. So it's not new. It's just that we decided to ask Jason if we wanted to show everybody the program again.
Yeah. And it went away, I think, because everybody was concerned about the mortgage crisis and there was a lot of compliance issues and nobody really knew. And I'm not saying the compliance issues have eased up. What they've done is they've matured. So compliance is mature. The compliance is matured to the point where they're like, okay, this is fine. It's okay to be 1099 in your loan officers. It's okay to be duly licensed. The Department of Commerce takes the point of we're not going to step in. If you want to become duly licensed and have two professional licenses, we're not going to come in and say you can or cannot do that. They have the thoughts of if you're going to become licensed in two different areas, just like an insurance agent. If you were going to be an insurance agent, do your insurance license, they're not going to step in and go, no, you can't do that. You can't expand your career. You can't expand your education. No, they're not doing that. They allow this to happen. They encourage it actually because you become more of a better, well-rounded professional in the industry.
Yeah. Let's see if somebody else. Brenda had another question. I don't know if Jeremy's moderating still, but
Yeah. Yeah, just a follow-up question
I
on
think
that
she's
for
getting down
Glenn.
to if you guys can control the 2.75 and help somebody get a better rate, or if it's just a flat standard, or could you take less and somebody gets a better rate?
Randy, is that a question for me?
Yeah, I guess it is.
What was the question? You were saying, can you get a
Well,
better
I
rate?
have a feeling that this is where Brenda's going with this
Oh, I
because she
didn't.
said specifically if the lender is paying 2.75, what conventional interest rate will the buyer receive? Like, is it a standard competitive rate? I think she's wondering because all of us have that loan background or a lot of agents might know back when we had yield spread, and the more yield spread, the higher the rate would be, the more the LO would get paid. So, like, is this 2.75 a flat standard, and you can't control it, or could you take 1.75 and all of a sudden your borrower has a better rate?
Yes, that's called borrower paid, and you can do that in certain situations, and that is allowed. There is some compliance things. It generally needs to be approved and needs to be looked at, and there has to be justification for it, not to compete against another lender. That's what the rule is on that. The rule is you can take a lower commission, but only to like qualify the individual better, not necessarily because Wells Fargo is quoting this or XYZ mortgage companies quoting this. So I got to compete. So I'm going to go lower. Now, There are people that are doing that, and it is common in my industry to do that. If you want to get paid too less and you want to lower the rate, make it ridiculously low, or even if you're doing a loan where you don't even want to get paid, like if it's an in-house loan, you can certainly do that, and the rate goes really low at that point. It's called the par rate at that point. So yes, there you can go lower to answer your question of 275, and it is done a lot in our industry, and it is okay to do so. And this reminds me real quick. Did that answer their question? Because I wanted to mention something else real quick.
I think so.
Okay. Uh, uh, so at that point, then you would, yeah. So the breakdown then of those levels, the 25, 50 to 100% would be dependent upon that commission then at that point. Again, which is 100% transparent on the closing disclosure. I did want to mention too, because how many people do we have in this class?
Well, I think
20?
there's 19 now.
20? Okay, I see 20.
Yeah.
Okay. So I am going to offer Randy, I did not tell you this, I didn't tell Randy this, but executive mortgage brokers, any classes that anybody that's on this class, on this line, all classes will be reimbursed once when you pass your test. So for example, if you take the Knowledge Coop or you go to OnCourseLearning.com or go to themortgageeducators.com, do your 20 hours, give them the $400, then go to CompuCram.com, spend I think $150 on that for the test prep. Once when you pass your test, executive mortgage brokers will reimburse you for your entire education. I'm just going to do that once here for Randy's team here, for you guys that are on this call. So if you want reimbursement for this, you can certainly get that reimbursement. And
You know,
we will honor that.
we use what is it, Jeremy? CE shop for a bunch of our CE because we got an affiliate agreement with them, and so we get these codes that go from 20 to 40% off, and we only share the ones with the agents that are 35 and 40% off because they're giving us the codes all the time.
Okay.
So even if Jason reimburses, if anybody wanted to do that class, I did mine last year. Um, you can get a code from Jeremy and go to a CE shop, and I think you can knock like 40% off of the 20-hour CE class. And I think they got test prep included and all that stuff. So a few $100, whatever. I don't know why they don't do it yet, but I mean, this is deep knowledge for real estate individuals anyways. It should be able to be used as continuing CE, but I don't think anybody's gotten the mortgage course approved for that. So
Yeah, Randy, I'm working on that. ChatGPT and I are working heavily on that right now to try to make it so that some of your 20 hours going to a loan officer will be used as CE credits for a real estate agent as well. Because, like I said, most of these real estate agents here, most of us all already know half of what needs to be known in the industry already. So I'm working on that, Randy, still trying to get a CE credit for real estate agents to become licensed loan officers as well. I'm working on that.
And to piggyback on that, Randy, what you said about the CE, every Wednesday I send that code to everyone, last email. So watch out, an email from me every Wednesday. He's correct, 35, 40% off. And sometimes at the end of the year, they will give us 50%. So yeah. I think Latanya has a question. Go ahead, Latanya.
I do. I was wondering if Randy could mention that the percentage off with with the CE company that we go through. So what I wanted to know is, does that 35 to 40% pertain to this brokerage, this loan officer course? How can you explain that again?
well, the CE shop gives us discount codes to advertise periodically to agents.
Uh-huh.
So if you get the discount code and the website accepts it, then yeah, I think it does. I'm pretty sure I used a discount code to pay for my mortgage 20-hour class, and Jeremy gave me the code, and I'm positive it worked. I did it 1 year ago, so I don't remember exactly. I think I did it like 15 months ago. But I'm positive I got 35 or 40% off my mortgage class. I mean, they're designed for CE for realtors, but I think they work site wide, you know?
Okay. And so I can go to the CE shop and do the mortgage class on that.
Correct.
Randy, that's what you did, right? Randy, that's what you did, correct? That's what Randy did.
Yep.
Okay.
I think Randy got disconnected or something, but Latanya, that's what Randy did a year ago. He went through that class and got it and used his discount, so he thinks. But again, like I said, Latanya, if you do complete this, you're going to be reimbursed.
Be reimbursed. Yeah. So, okay. That's fine. I'm interested in that. So,
Yep.
Perfect. Also,
I have a handful of people here that need my help, so I am going to get off the call. You guys work with Jeremy and Jason, and make it a great week. Hope this was information that if nothing else, if you don't go ahead and get a mortgage license, which you could do it in 3 years, it doesn't matter. We got you the information, right? And
Correct.
so at least this kind of puts perspective for everybody how mortgage stuff really intertwines. One thing I really like about knowing how the loan works is because it's a no BS thing. If somebody's asking you why the buyer's not closing, you know exactly why, because you can go in there and read the underwriting conditions. So it's not a mystery it's just they go hand in hand, really. It's just how many things do you want to learn, right? I got Brandon's our Wisconsin broker. I could easily be the Wisconsin broker, but I want to, divert some knowledge and let him do his broker stuff there. Jason does his loans, and I focus on running our brokerage, right? But like I said, I had a mortgage brokerage for over half a decade, and it's a good idea.
Maybe, Jason, why don't you put your email in there? And if anybody thinks in the next, 6 months or whatever, you're going to go get your license for this, why don't you all just email Jason, and then he'll have your name on a list that you did attend this meeting today.
Yeah, if they take this, if they use this, I think I'm sharing my presentation right now. Can you see my screen right now by
Yeah,
chance?
we got the
Yeah, so
QR code.
if you take your cell phone and just take that, hit that
QR
QR code, and then it should pop up in your text messages to send your name and email, and then I will forward back to you the document information that we have as well with
Perfect.
this.
Also, Jason, I'm not sure if this was already answered. A couple more questions from Holly. Can this compensation percentage ever change, or it's still constant? You were talking about the 275 earlier, so I'm guessing this pertains to it.
Yeah, they're saying, can the 2.75, is it constant or can it be changed? Is that the question?
That's the question, yeah.
Yeah. Yeah. So we mentioned this before. Again, it can be changed and it often does. It can be lowered to help with an interest rate for the client. Legally, though, it can't be for competition purposes, is what it is. So you can't lower it because of competition purposes. But I will tell you, even the 275 is going to bet, I love taking my clients to wellsfargo.com mortgage rates and say, here's what the mortgage rates are today with Wells Fargo or US Bank. I actually take my clients to their website and I show them what the Wells Fargo rates are. And me making 275, I'm about an eighth to a half of a percent quarter, sometimes quarter, depending if conventional FHA, I'm about a half a percent less at making 275, quarter percent less on conventional. And we don't have lender fees too. That's the other thing. There's small disclosures in the big banks that they charge lender fees as well, which is basically a discount point. You add those into the equation, we're generally about a quarter to a half a percent less on conventional loans as well. But if you needed to get a borrower to because they don't qualify, let's say at 6%, and you need to get down to 5.75 and reduce your compensation of 2.75, you are able to do that. And there's no problem in doing that.
Also from, I don't have a name, iPhone 41, he was asking, is there a deadline? If so, could I have, if I can afford it in the next month or two, will you still reimburse?
Yes.
Gotcha. And
6 months. Yeah, well, you should
yes,
be able to do it in less than, you should be able to do it in less than 3 months. If you've been on this call, we will reimburse you. If you're on this call, we'll reimburse you.
perfect.
And
Brenda, there's a follow-up with Brenda. What are you referring to when you say competition? And as a loan officer, one needs to compete with other banks.
so compensation on the loan, is what I'm talking about. Compensation on the loan is what you get. You get compensation at 2.75% of the loan amount is what it is.
Is that
And
like,
generally, for example, uh, right now, like if you go to Wells Fargo mortgage rates, I just did this with a client yesterday, actually, because I know where the rates are right now on Wells Fargo's website because I was there yesterday. It's 6.125 on a conventional mortgage. And I quoted my clients 5.875 with no lender fees. So Wells Fargo would be 6.125 for an interest rate on a 30-year fixed conventional. You can go look it up. I'm pretty sure it's still there now. And that's a conventional 30-year fixed rate. And there's lender fees as well that's involved, as I mentioned. But our compensation, for me to make 2.75 on that loan, I was able to quote 5.75 or 5.8. I think it was 5.75. It was pretty low. And that was conventional. There's even more room on FHA or government loans. VA, we can even do better than that on government loans. So that 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 even at 2.75, so that's what the commission is 2.75 of that. And then it's broken down in those tiers or levels. Does that make sense?
I think the question was for Brenda. Brenda, does that answer the question? Or if you can unmute, you can ask more questions or need clarity, you can ask definitely a question. Lucinda McDonald has a question. I'm on my cell, can't scan the list. Also, my
Okay.
partner's involved with me. Sorry.
Yeah, go ahead.
I'm on my cell, so I can't scan the URL. And my partner's with me, so his name wouldn't show up. Is there a way that we can include him in it?
Yes, absolutely. That's fine. I would be fine with that, Lucinda.
Okay.
That's fine. My phone number, I can,
Okay.
can I think I can, I don't know how I can just give you, do you have a pen and paper right now? I can tell
I
everyone.
can put in this.
Uh-huh.
I can put in the chat box. It's fine.
Oh, you can put it in the chat box.
Yeah,
Lucinda, can you see the chat box?
I'll put it there. Hold on.
Yeah.
Otherwise, just say your phone number out loud real quick if they want to write it down.
It's area code 612
Mm-hmm.
296 7400. And that's my personal dial cell phone. 612-296-7400.
Okay, thank you.
Yeah,
I got the chat box, and also I had your email input in there too.
perfect.
All
Latanya,
right. Well, we're coming
think
up
that-
on an hour. So if there are no more questions, Jason, thank you for
Yes.
being here. You did a great job. It was great to see you again via Zoom. And we loved your joke at the beginning, or your magic trick. And if anybody has any more questions, feel free to reach out to Jason. Again, I thank you so much for being here. We appreciate those of you who show up to our huddles, and we'll see you the next time. Bye-bye.
Yep. Thanks, everyone.
Jeremy.
Thank you, Jason. Thank you, everyone.
Thanks, Jeremy. Thanks, Kathy.
Welcome. Right, bye.